Welcome to our channel. Today, we are diving into the timeless wisdom of John C. Bogle's The Little Book of Common Sense Investing. As the founder of Vanguard Group and the creator of the first index mutual fund, Bogle's insights are invaluable for anyone looking to understand the fundamentals of investing. Let's break down the top takeaways from this essential book. Bogle's core message is simple: keep your investment strategy straightforward. The complexity often touted by Wall Street is unnecessary for the average investor. Instead, focus on a diversified portfolio of low-cost index funds that track the broader market. This approach not only simplifies your investing process but also reduces costs and increases your chances of long-term success. Index funds are the cornerstone of Bogle's philosophy. Unlike actively managed funds, which attempt to outperform the market through frequent buying and selling, index funds aim to replicate the performance of a specific market index. This passive strategy minimizes costs and, over time, tends to outperform most actively managed funds. One of Bogle's key insights is the significant impact of costs on investment returns. High fees, whether from management costs, transaction fees, or hidden charges, can drastically reduce your overall returns. By choosing low-cost index funds, you can retain more of your investment's growth. Patience is crucial in investing. Bogle advocates for a long-term approach, allowing your investments to grow over time and ride out market volatility. Trying to time the market or chase short-term gains often leads to poorer outcomes and higher costs. Stick to your strategy, stay the course, and let compound interest work its magic. Financial news is filled with noise and speculation that can distract and mislead investors. Bogle encourages investors to ignore this noise and focus on their long-term goals. The market will have ups and downs, but a disciplined approach grounded in common sense will help you stay on track. If you are interested to investing in Indian stock market and don't have a Demat account, then we have given the link of Grow in the description where you can open your Demat account for free. Diversification reduces risk by spreading investments across a variety of assets. Bogle emphasizes the importance of owning a broad mix of stocks and bonds, typically achieved through index funds. This not only helps protect against the poor performance of any single investment but also positions you to benefit from the overall growth of the market. Investing can be emotionally challenging, especially during market downturns. Bogle's advice is to stay the course and stick with your investment plan, even when the market is turbulent. Emotional reactions can lead to poor decisions like panic selling. Maintaining a steady hand will often result in better long-term outcomes. Bogle explains that the average return of the stock market, minus costs, equals the average investor's return. This simple arithmetic underscores the importance of minimizing costs to maximize net returns. Over time, even small differences in fees can lead to significant differences in accumulated wealth. Bogle provides a historical perspective on stock market performance, illustrating that while markets can be volatile in the short term, they have historically trended upward over the long term. Understanding this historical context helps investors maintain confidence and perspective during market fluctuations. Finally, Bogle emphasizes that your investment strategy should align with your personal financial goals and risk tolerance. There is no one-size-fits-all approach, but the principles of low-cost, diversified, long-term investing are broadly applicable. The Little Book of Common Sense Investing offers a wealth of wisdom that is both accessible and profound. By embracing simplicity, minimizing costs, and maintaining a long-term perspective, you can build a robust investment strategy that stands the test of time. Remember, investing doesn't have to be complicated. Sometimes, the simplest approach is the best. Thank you for watching. If you found this summary helpful, don't forget to like, share, and subscribe for more insights on personal finance and investing. Until next time, happy investing!